Hey, what's up guys? Justin here. Welcome back to the channel. So in today's video, we are taking a look at Ayro stock. And I made sure to actually look up how to pronounce the name of this one because in my last video covering small cap EV stocks, I pronounced the name of the company wrong for the entire video. So hopefully I got it right this time. Now, Ayro is a very interesting company because instead of manufacturing EVs for the direct-to-consumer market, Ayro is taking a different approach. Ayro is designing and building EVs that they call low-speed electric vehicles, or LSEVs. And I will explain what I mean by that in a second, but the company projects that sales of LSEVs will reach $23.9 billion by 2026. So this is a huge opportunity for a company that not only wants to sell LSEVs, but be a leader in the LSEV market as it continues to grow. Now, full disclosure, I did purchase $500 worth of Ayro stock a couple of days ago because after doing research for this video, I felt like this was a good opportunity to get in early on a stock that is serving a segment of the EV market that I feel is being ignored right now. And I plan on holding on to Ayro stock as long as the growth story continues to play out. So what are low-speed electric vehicles and what are they used for? Well, low-speed electric vehicles are compact, purpose-built vehicles that can be used for multiple applications, including college campuses, corporate buildings, government buildings, and hotels and resorts, just to name a few. And yes, as the name suggests, the vehicles have lower top speeds than regular cars do. But this is by design since these vehicles will mainly be used in areas where high speeds aren't necessary. And when I first heard about this concept of LSEVs, I immediately thought of the university that I graduated from. Our university had very nice landscaping that was maintained by what seemed like a small army of small maintenance trucks that would zip around campus on the sidewalks and roads. And these small maintenance trucks seemed to be perfectly suited for our campus since they were very compact, but still had enough room for landscaping material or ladders or anything else a maintenance employee would need. But since these little trucks were gas powered, they were pretty noisy, and I'm sure they were not very efficient since they were constantly starting and stopping. So right off the bat, I saw that this was a potential niche that Ayro's battery electric vehicles could fill nicely. Instead of an inefficient, noisy, polluting gas vehicle, Ayro's EVs would offer a more efficient and much quieter experience. And with over 4,000 college campuses in the US alone, this represents a good-sized opportunity for Ayro to sell a lot of their vehicles. But in order to justify buying Ayro stock, I was going to need to see a lot more potential markets than just college campuses. And this is where Ayro is really trying to become a leader in this new area of the market by marketing their Club Car 411 for many different purposes. The company's website claims the Club Car 411 can be used for applications including education, which I already mentioned, government and corporate campuses, hotels and resorts, and the food, retail, and beverage industries. Now obviously these cars cannot be driven on the highway since the Club Car 411 has a top speed of only 25 miles per hour. But that is not an issue because the Club Car 411 is meant to stay on the campus where it is being used. But at 25 miles an hour, it can be driven on main roads if necessary. And what I really like about this strategy is that instead of trying to sell directly to consumers, Ayro is targeting businesses and institutions who will most likely sign contracts to buy fleets instead of only one vehicle at a time, which could help Ayro scale faster and sell more vehicles in a shorter amount of time. Also, individual consumers tend to be very picky when choosing cars and require all sorts of special features before buying one. But since Ayro is targeting commercial customers, their EVs don't need to come with all the bells and whistles, which will cut down on costs and help them improve their margins on each vehicle they sell. An additional benefit to making specialized EVs for commercial applications is that there is a lot less competition. Tesla dominated the consumer EV market worldwide last year and will probably continue to do so for quite some time. And while established automotive brands such as Nissan, Toyota, and others have a fighting chance against Tesla, it is much harder for a startup to grow organically in such a crowded market. So Ayro is trying to establish themselves in a niche of the EV market before anyone else can. And like I said earlier, Ayro is projecting this to be a $23.9 billion market by 2026, which is a huge opportunity for such a small company. So let's take a look at Ayro's products and see how they plan to capture the LSEV market. Right now, Ayro has two products they sell, including the Club Car 411, which we just talked about, and the Ayro 311, with a third vehicle, the Model 511, an outdoor utility truck, still in development. But the Club Car 411 is the company's flagship product and the one they will rely on to generate the most sales early on. The 411 is an all-electric light-duty and compact work truck that can easily be driven on the sidewalks of college campuses, for example. The 411 also comes with 3 different bed configurations that are useful for a number of different applications. However, the structure of the vehicle remains the same throughout all 3 versions, which will help reduce costs and speed up the manufacturing process. The 3 configurations include a fully enclosed box, a traditional pickup truck bed with raised sides, and a flatbed. The company lists 6 main advantages of their 411, including ease of use, innovative and flexible design, roadworthiness, low cost of ownership, and 0 gas emissions. But out of all of these, I think the 2 that will appeal to businesses the most is the potential cost savings and the environmentally friendly nature of these vehicles. And with the 411 being heavily marketed towards college campuses, I think sustainability will be a big selling point for these vehicles. Also, the components of the 411 are DOT certified on roads with speed limits up to 35 miles per hour. So if these vehicles need to briefly jump on a main road to get access to another part of campus, they should be able to easily do that. And this might not seem like a big deal, but most small electric vehicles such as golf carts, for example, are not allowed to be driven on main roads, which could be a big problem if the college or business campus is more spread out. So the 411 being a roadworthy vehicle could be an important selling point for Ayro's vehicles. Now, Ayro's website lists many different uses for the 411, including for maintenance, event and service planning, kiosks, catering, and delivery. And with the 3 different configurations, businesses should be able to find a 411 that fits their own unique business needs. Okay, let's move on to Ayro's other product, the 311. This product is very similar to the FUV that Arcimoto makes, which I covered in my last video. The 311 is a 3-wheeled all-electric vehicle that can seat 2 people and comes in multiple different body options, including fully enclosed or half doors, and then a 1-seat option with additional cargo space. The main difference between Ayro's 311 and Arcimoto's FUV is the top speed of each vehicle. The 311 has a top speed of 50 miles per hour and is street legal on roads and highways up to 55 miles per hour, whereas Arcimoto's Deliverator has a top speed of 75 miles per hour. But I don't think the speed limitations of the 311 will be an issue based on Ayro's intended purposes for it. Ayro's grand plan for the 311 is that it will be bought and used by restaurants as a delivery vehicle, which is similar to Arcimoto's plans with their Deliverator. And Ayro thinks this could be a very lucrative opportunity because investment research firm Morgan Stanley predicts that over the next decade, 40% of restaurant sales will come from food delivery apps, representing a $365 billion worldwide market by 2030. With an expected annual growth rate of 20% per year. Now, what's interesting is that currently third-party food delivery services such as Grubhub, DoorDash, and Uber Eats are very expensive and can cut into restaurants' profit margins by as much as 30%. But by relying on the 311, which has an estimated cost of only $10,000 to $14,000, restaurants can save a lot of money. In fact, gas-powered vehicles cost an average of $8,000 a year to operate, compared to only $4,000 a year for the 311, which is a 50% reduction. So by purchasing the 311, restaurants can add increased delivery capabilities and save money at the same time. Also, the 311 can display a restaurant's logo to help raise brand awareness. Now, before you click away from this video, I am about to discuss something about Ayro stock that is very important and that I believe sets them apart from companies that are competing in the same space. When evaluating companies to invest in, you need to focus on 2 main things: the company's plans and management's ability to execute those plans. Because even if you have the best products in the world, you still need to manufacture those products, otherwise the company will eventually fail. Nikola is a good example of this. Nikola's products look good on paper, but until Trevor Milton, the CEO, is able to execute the company's plans, no products will get manufactured and Nikola will not generate any revenue or profits or any of those other important things that are needed to be considered a successful business. But with Ayro, I think they might have a winning combination of good products and the right management team that knows how to get things done. For starters, the CEO of Ayro, Rod Keller, has worked as an executive for many Fortune 500 companies, including Dell, Cisco, and Toshiba, and was named the president of Segway in 2013 before becoming the CEO of Ayro. So this is a guy with decades of leadership experience who I think understands the market and knows the steps that need to be taken to help Ayro grow. And the company is expecting big growth soon. Ayro recently announced they had finished expanding their electric vehicle factory in Austin, Texas from 10,000 square feet all the way up to 24,000 square feet, which will allow them to produce up to 600 EVs a month. And when the news of the factory expansion was released this past Monday, the stock went up over 100% in early morning trading. So clearly there are a lot of positive catalysts for Ayro stock right now, and with a market cap under $100 million, this stock presents a great opportunity to get in early. For comparison, Arcimoto's market cap is around $200 million, which is over twice as much as Ayro's current valuation is. So let's go ahead and dive into the financials a little bit. Ayro claims that they have proprietary production methods at their facility that allow them to generate over a 20% gross margin on the 411 and over 30% margins on the 311, while also claiming that most purpose-built EV manufacturers actually have negative gross margins, which if true would be very impressive for Ayro and would help them tremendously with their finances early on. But I was also curious about Ayro's claims about other specialty EV manufacturers having negative gross margins, so I did some research and found Arcimoto's financial statements from the past 2 years. Based on this financial statement, it looks like Ayro might be right. Arcimoto posted gross losses in both 2018 and 2019, with 2018 coming in at negative $32,535 and 2019 coming in at negative $1,923,617. So if Ayro is able to achieve a gross profit margin right from the start on their LSEVs, that would be very impressive and give them a big advantage over their competitors. So far we have covered quite a bit in this video, but one more detail I do want to talk about is distribution. Distribution is a big problem for small EV companies because once they manufacture and sell their vehicles, they still need to actually deliver them to their customers. So a broad distribution network is very helpful in expanding your presence in the marketplace and is important for increasing sales volume. And to help with this problem, Ayro recently announced a strategic partnership with one of the largest distributors of low-speed vehicles in the country, Club Car. Club Car is a global leader in the golf, consumer, and utility vehicle space with an extensive global distribution network. Using this partnership, Ayro has already began delivering their Model 411 LSEVs throughout the US, Canada, and Mexico. Also, Club Car has already built relationships with many universities throughout the country, which Ayro can use to sell more vehicles, which will give them a huge boost as they look to expand early on. But overall, the main focus of CEO Rod Keller's strategy is efficiency. He believes that Ayro has the right technology, manufacturing, and partnerships to not only get to market faster, but to also ensure higher margins, which are very important for new companies. And it could be a big reason that not a lot of investors have heard of Ayro yet, because they are just moving so fast. So like I said at the beginning of this video, I went ahead and bought $500 worth of shares on Monday because I like the company's products and I think that they have what it takes to grow their market share moving forward. And I wanted to make this video to let you know about Ayro stock because it is a very small company right now and it is a company that not a lot of investors know about yet. But that being said, I only put 0.5% of my portfolio into the stock because at the end of the day, it is a very risky investment based on its small size. And there are a lot of other great growth stocks out there right now that I can invest in. But Ayro is one that I will keep my eye on and I might even add to my position over time if the growth story continues to play out and Keller can continue to execute well. So if you are looking for other great growth stocks in the EV market, check out some of my other videos where I discuss some of those and make sure to subscribe so you don't miss out on any of the videos I put out each and every week. Thanks so much for watching, and I'll see you all in the next one.